Welcome to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable where we talk about current market conditions. I'm going to go through some of the earnings. We have Micron next week, which I think is important to look. KBH from the last week. General Electric, Goldman Sachs, and just in general, the value stocks versus growth stocks, and what to expect short-term and long-term. If you have any questions, please enter them. My goal is to answer all the questions before we leave. Maybe give me 30 minutes to go over the content, and then I'll open it up for questions. So this is my bio for those of you who are new. Welcome. Type in first if this is your first live event. Werner, William, not sure if you guys, I only see first name, so it's hard for me to judge. But Mark Lalit, welcome back. If you are new and you type in first, one thing that's different about Yellow Tunnel and my background is that we are heavily invested into artificial intelligence and neural networks. We have a team of financial engineers that are building and enhancing models to provide signals. And not only do we provide these signals, actually trade them in a live trading room environment. We have a morning session and a closing session. And do that for over 20 years, 25 years. Disclosures are very important. I'm going to go to specific trade ideas like General Electric. So disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Right, before we jump into trading psychology, let's talk about current market conditions. Let's look at the model profit accelerator. I just updated this for the next week in terms of current portfolio and some of the signals that I'm trading. Spiders 544, 548 overhead resistance for tomorrow. So we're trading, the range is narrowing less than 1%. Still strong uptrend, but in the next 3 months, again, market is ahead of itself, right? These long-term calculations for 1 month, 2 months, 3 months, they're updated once a month because each data point is 1 month. So we're waiting for the data point to be completed. 544 by 548, that's the daily predictions where each data point is 1 day. So we wait till end of day to update it around 6, 7 p.m. Chicago time. So that's spiders. If you look at price action, we are very close to all-time high. Last week, we made a new all-time high. Triple witching expiration, so the volume is very large. You can see stocks like NVIDIA. Pretty large volume on NVIDIA, and I think spiders, if you zoom out to daily chart, now I'm looking, each data point is 1 day. So above average volume and triple witching expiration. We do have Russell rebalancing, quarterly rebalancing end of June. So that also is going to create more volatility and more volatility in the market is probably going to be choppy in the next week or two. But the main price action, interest rates, right? Interest rates are below 4.3, right? If you follow my if you have paid subscription, every day I send an email and I talk about interest rates. I talk about US dollar, different sectors. So you can see that 10-year yield is below 50-day moving average, below 200-day moving average, below 4.35, which has been overhead resistance for several years now, or a support. So it's a very important line, very important level. And despite being oversold, interest rates are not rallying back, which is probably for a lot of technicians is a surprise. So we'll see if we can get back above 430. Some of the data did come in better than expected last week, right? We can look at the services PMI, manufacturing PMI. They came in better than expected, and usually when the data comes in better than expected, market, we don't have that. Oh, we do. The market usually interest rates go up, right? Because higher for longer. But we haven't had that, at least for now, because there's definitely a, when it comes to housing data, building permits, housing starts, it came in worse than expected, continues to trend lower, indicating that the economy is slowing down. And you see home builders underperforming, you see transportation underperforming. What else was interesting last week? And retail sales come in weaker than expected, which is also indicating that the economy is cooling. So interest rates are kind of not, even though they're oversold and they're holding the 4.20 level, that those are the two levels I'm watching. If we drop below 4.20, that would be probably still bullish for the market. If we bounce back above 4.35, that would be short-term bearish for the market. Another interesting occurrence in the past couple of weeks, divergence of dollar versus interest rate. Usually interest rates pull back. In the past couple of years, dollar pulled back. Dollar rallies, interest rates rally. Now dollar rally and interest rates drop. Why? Again, geopolitical risks and news from Europe, France, Germany. You can see the bond yield, investors demanding much higher bond yield, and you have with the uncertainty in elections in France. And you do have Germany and Europe in general have kind of a sharp pullback, right? This is Germany, almost 10% pullback, and VGK, Europe in general, is under pressure. And you can see weaker dollar, and you can see weaker not only in Europe but also in Japan. Right, Japan continues to deteriorate at multi-decade low, so that contributes to strength in dollar, and that's could be a headwind for the market. Also, if you look at Nvidia, with a triple witch in expiration, kind of this reversal, right? This is considered to be on an above average volume, considered to be bearish, right? We had similar price pattern in March, right? Almost identical setup. I mean, a little bit obviously about higher volume because March versus June, almost July. But it could be a start of at least several months of consolidation. And you can see it not just in Nvidia, but in general in growth stocks that have been leading the market in the past, Micron, Broadcom. So those are some of the observations, right? With lower interest rates, you do see stocks like General Electric already been in consolidation, right? General Electric hasn't really gone anywhere since end of beginning of April, end of March. Again, above average volume due triple witch in expiration, but is able to bounce back and continues to grind higher. And you can see it among momentum stocks in the value complex, right? Whether it's a bank like Bank of America or Goldman Sachs investment bank in General Electric, industrials, Eli Lilly, right? Some of the pharmaceutical companies in weight loss, retail, TJX, right? Walmart. These are the stocks that are continued strong upward momentum, and now with lower interest rate, you have rotation into some of the value stocks. Microsoft, mega cap technology are also not all moving in the same direction, but you see Microsoft is trying to break out to all-time high. Amazon was a signal from this weekend, actually, when the model run. It sees that potentially Amazon is trying to break out to all-time highs. So you still have, even in technology names, you still have momentum trading. So it's a stock picking market, right? You need AI, you need models to give you signals, valid signals. You have to diversify and have a balanced portfolio that you can manage. So that's my view on the market. What usually I do in the live trading room, and I try to do it every week, right? You want to decide how aggressive you want to buy the market, right? Or short the market. Are you long? Are you short the market? And see what are those different scenarios that can occur, and decide how much money you're willing to invest, right? First, support the breakout, right? The 530. Longer term, right? You have to go to April to see market close to 530. We couldn't break it in May, and finally in June, July, or June, we finally broke out. So that's probably, and that will be close to 50-day moving average. So that's, I think, is the first important support one. Overhead resistance, let's see how well bulls and bears are positioning, right? So if you follow my live in the live trading room, when I do earnings or when I just decide where the support and resistance levels are, I always look at the positioning. Wow, I have a lot of people. Thank you for attending. Love it. Appreciate it. Dow, Denis, sorry if I mispronounce your name. Lalit, Luis, MC, Mark, Walter, Werner, William. And we have few traders. Thank you for participating. Really appreciate it. A lot of people. Love it. Bob, Fred. Okay. So the question is, okay, how far can the market go? Usually you want to look at the position, right? We talked about gamma squeeze. We talked about, if dealers are long gamma, they are forced to sell the stock when it approaches a certain strike price where you have high open interest, right? You see these spikes. These are the spikes where there is a high open interest, right? Gamma levels, you just multiply gamma by the contract size, but more important, open interest, right? So these are the spikes where there's open interest. Open interest corresponds to support and resistance levels on your traditional charts, often. But it gives you kind of a clear view what dealers will have to do, right? Because the dealers, they're the ones that make the market. And when dealers have very large position at 530, right? That's the first spike, big support, 35,000 Vanna, right? These are different second level derivatives. Sensitivity of delta versus stock price movement, that's gamma, versus volatility, that's Vanna, charm versus time. Maybe not important how do you derive it or the mathematical calculations, but what's important is at which level you have a high open interest, and that drives the math, and that drives the support and resistance levels. So on the downside, 530, somehow magically it corresponds to 530 that I picked in terms of the breakout, because that's what people are looking at, right? And that's the level they want to defend, right? If you have a portfolio position, you want to defend from market pulling back below 50-day moving average. So people are selecting the support level, and often it does correspond to that price level. Can you guys hear me? Somebody complained that the audio is. Just let me know if you guys can still hear me. I want to make sure that I don't just talk to myself. So just type in yes if you can hear me, or no. Yes, thank you, Lalit. Appreciate it. So on the upside, you have much smaller volume, right? So there's the skew toward puts, a lot higher demand for buying puts than buying calls on spiders, which is the usual, right? Because you have institutions, you have large wealth management fund, sovereign funds, they're all hedging their portfolio. And on overhead, the resistance 560, right? That's around 15,000 Vanna. So those are the two levels that going into the next earnings season, you want to consider 530 on the upside, 560 on the upside, and 530 on the downside. So you can go up 3%, you can go down 3% as we approach in the earnings season, right? Second week of July. So scenario one you want to consider is that we break out 560. Something happens positive. I don't know, Micron is going to create, Micron, FedEx announcing earnings this week. Maybe Macron holds the, is able to retain majority, and you have less risk in the market. Maybe Nvidia will come out with some new chip that's 10 times faster, and they're going to generate. So scenario number one, we break out 560. Scenario number two, we follow dealer positioning, and there's a strong support at 530. There's some call selling at 560. We were already at 550. So we're trading in the range between 560 and 530. And scenario number three, right, maybe regional banks default because we still have high debt that's coming due this year and next year in terms of refinancing of multi-unit families, residential, commercial real estate, New York, San Francisco, North Carolina, Texas. there's a lot of companies that are either declaring bankruptcy or trying to refinance their debt. At some point, it's kind of a tip, could reach a tipping point, and maybe there's a bigger wave of these defaults that potentially can impact more regional banks, right? Or maybe Macron loses majority, and maybe France leaves the European Union, right? Something along those lines. Or people concerned that France is going to leave European Union. So you have scenario number one, we're going above 560. Scenario number two, we're trading in the range. Scenario number three, we're breaking below 50-day moving average. How many of you say one? Vlad, don't stand in front of the train. Train is moving in one direction. Don't fight the Fed. Fed committed to lowering interest rate, 560, above 560. Scenario number two, NVIDIA kind of, large reversal, gamma squeeze, potentially going through consolidation. Economy is cooling. There's no reason for market to continue moving in one direction. We need some kind of consolidation. So scenario number two, and scenario number three, something's going to happen, for too long, interest rates been elevated, inverted yield curve, something's going to break, and probably by middle of July. So scenario number three. All right, how many of you say scenario number one? How many of you say scenario number two? And how many of you say scenario number three? Dow, Denis, sorry if I mispronounced. Denis, Lalit, Louis, MC, Mark, Walter, Werner, William, Trader. 3, 1. Okay, thank you. So we have 1, 3. Nobody thinks it's 2 for the next 4 to 6 weeks. 3, 1. Anyone else? Michael, Steve, Bill, John, Fred. Anyone? Elite 1. All right, so we have more 1s, 3s. I'm gonna go with 2. So my answer is 2. I think I'm gonna go to some kind of a consolidation. Looks like NVIDIA already started it. But it's still, I think, patterns of higher highs and higher lows. Higher highs, higher lows. So that's my view on the market. In terms of trade ideas and some of the services we offer, aggressive power trader just ran. This is for Monday. Since you guys are here, I'm gonna go over. So AT&T, I do like AT&T, Amazon, Oracle, right? So all strong stocks. If you don't have access to, if you don't have, technology, then Amazon, it's overbought. We do have triple witching expiration, so you might, if you day trading, this is aggressive power trading, short-term trading. Sometimes I use these signals for longer-term trading. In case of Amazon, I would want to see a breakout. Maybe before the earnings, we're not going to see the breakout. But with the Russell rebalancing and the triple witching expiration and quarterly rebalancing, if you're a long-term trader, I would wait for a breakout. If you're a day trader, usually what I do is I would wait in the live trading room. Right, you can see all the live trading room recordings, right? You can do your own AI analysis on any stock you want, right, like Microsoft. So all of that is available to you. You can enter your phone, but usually I wait 15 minutes, right? So the way I explain, you wait 15 minutes, right? You have kind of a clear support for tomorrow, maybe 188, right? Now, let's see, where is the Microsoft? 187, okay. So ideally, if it pulls back, I don't know how the market is going to open, right? That's why I wait 15 minutes. But ideally at 188, you have a strong support. If we drop below 188, most likely, we're going to continue going lower. But at least short term, you do 5 minutes, you do have short term move to the upside. Then I zoom out to 1 hour, yeah, 188. So Amazon looks like a good candidate for short term trading for Monday because I know where the support is. Model identify that it's an uptrend. So unless we have some bad news, I don't know how the market is going to open tomorrow, but that's why I suggest waiting 15 minutes, right? So that's aggressive power trader, 1% target gain, stop loss. I encourage you to watch the recordings. I encourage you to participate in live trading room if you have subscription, and you can see my orders position, and again, you can analyze the stock. So that's Amazon. AT&T, Also is trying to break out, right? I would want to wait again 15 minutes, but as long as it stays above 1820, right, maybe 1%, this looks like a strong uptrend and potentially continue to break to the upside. So it could be a short-term trade where you're holding this for 1 or 2 days or 1 or 2 hours, or it could be longer-term trade, right? Because AT&T broke through above 18 level, that's 2024 high, consolidated, right? You do have a strong uptrend. So maybe it makes sense to continue, when it pulls back to this trend line, continue to accumulate AT&T, especially that the interest rates are low, right? Usually when the interest rates are pulling back and lower, you have value stocks rally, right? Because banks do well when interest rates rebound, but you don't need to rebound in interest rates. So that would be aggressive power trader and how I would use these signals. We have weekly power trader. Similar, it's a different model. It trains on different intervals, right? Short term, you concentrate on, test couple, usually you need 200 data points. So you look at 200 data points where each candlestick is 1 day. Weekly trader, you zoom in out, maybe instead of looking at 200 days, you look at 600 days. But a little bit different model, but showing kind of the same, similar narrative, right? Bank of America, right? They've been consolidating, right? Bank of America, General Electric consolidation, potentially, and it's in strong uptrend. So potentially at some point it breaks out. Maybe you have to wait for the earnings season, maybe before that. But you do see Bank of America, Goldman Sachs, General Electric, Google, right? I actually found Google for tomorrow. Google is also, looks like it wants to break out to all-time high. It's actually made maybe marginal highs on Friday. So that's weekly power trade. That same thing. You have orders, you have positions that I'm trading. If you want to know when I don't trade all of these signals, right? If I already have banks, I'm not going to buy another bank. I don't want to be overly exposed. But if I don't have banks, then Bank of America sounds like as good candidate as any to invest into the banks, large banks. Right? You can enter your phone. You can see history of all of our portfolio, for models output. And I encourage you to watch live trading room recordings, right? Because it's not just buy, sell. You need to know there are a lot of nuances. So watching the recordings, how I trade these signals, I think will help you to become more confident and successful in trading these signals. Dynamic power trading is where I trade stock and options, right? So you can actually see I'm buying General Electric, right? I'm long General Electric stock, and now I'm buying August 155, 160 spread. So I'm trying to give examples both where you can trade stock or options and advantages of stock options, right? Option spreads, right? If you look at the image of profit and loss of right, so this is what's called bull call spread, right? So you're limited by your gains, right? At the strike price that you select, right? Let's say this is 40 strike. In my case, it's 155 strike, 155, 160. So this is 155. If it doesn't jump, if it drops below 155, then that's the maximum loss, right? 160, again, you kept your maximum gain, but you can look at dealer positioning and exposure, and maybe you don't think it's going to go much further than 160, maybe 165, maybe 170, but it's going to just stay in that range. So this gives you limited losses, it gives you limited gains. You can structure your trade where in this example, I'm risking $3.50, right? Difference between the strike prices is 5. and I'm paying $3.50 because I'm conservative and I'm buying in the money, right? Even though the stock is at 164, the spread is already in the money, right? So I'm risking $3.50 to make $1.50, and all General Electric has to do is stay above 155, right? As long as it continues to stay above 155, right, then this should be a profitable trade. I mean, if it expires at 155 and I wait till expiration, then it's a maximum loss. But as long as it's trade in this range, the time is on my side, right? And there'll be time decay, and this should be a profitable trade. So this is an example of profit loss for option spread calls. We have Micron earnings, so image of profit and loss for call. I mean, usually I do both call and butterfly. So Micron, right? Micron announced an earnings. Again, anything that has to do with AI, there's a large demand, right? Unlike spiders, people are not buying puts. They're not. This is dealer position, right? And you can look at the gamma, right? You have these very large gamma. So dealers are short gamma. They're actually short gamma. And when dealers are short gamma, you know, if the stock is there, if there is a surprise and stock reaches, let's say, 155, right? So maybe 10% up. Micron usually can move 10% up or down. So if it reaches 155 and dealers are short gamma, they might have to continue to buy stock, right? And same thing happens at 145, 150. So if you're at 50, it could push to 155, it could push to 165, it could go 170, right? Because it's very large positioning, and this is negative VANA, right? So dealers are short gamma, and they are providing liquidity for everyone who's buying calls. All it means is that right now vol skew is below 0.50, right? And we don't have too much time going, but that's the idea, right? You have put skew, you have call skew, right? And sometimes people buying calls, sometimes people selling calls, majority. So it's very important where the skew is, and then you can be prepared. And same thing goes for on the downside. If Micron misses the earnings, you could have a large move to the downside, right? You have a lot of people are selling 115, 120 puts, right? And we already have gamma squeeze. Micron misses earnings, you could have 20% move in Micron, right, to the downside. So in that case, you want to decide, am I want to be long volatility or am I want to be short the volatility, right? And in this example, I'm probably going to be long volatility. Micron is announcing earnings one few days, right? Let me just double check. So you already have kind of example of gamma squeeze. If they have negative earnings, you could have 2 standard deviation move in 3 days. So next earnings is in 3 days. Wednesday after the close, I believe. So Wednesday after the close, right? So butterflies, right? In earnings, I'm already preparing for earnings power trade where I trade either butterflies, spreads. Sometimes I defend with a stock. But same thing, you can see my orders, you can see my position. I encourage you to watch the live trading room recordings. Every day I send the video and say, please watch. Fred asked me to be a little bit more careful. So the idea, I would say, watch Micron recording from Tuesday's session, right? Or watch FedEx recording from Wednesday's session. So please add info@yellowtunnel.com to your email provider so we get into your inbox as opposed to promotional or junk. I encourage you to watch the recordings from live trading room. Again, you can do AI analysis and you can see other stocks that are announcing earnings, Nike, FedEx this week. So that's an example where I trade up, and you will see all my orders in position. This is an example where I try to do either long or short volatility, right? If you're short volatility, you're doing iron condors, right? So instead of using a butterfly, where you identify the range where the stock is trading, right? These are your condors, these are your butterflies, or spreads, right? You zoom out on the range where the stock is trading and you sell in premium. So that would be an example of the butterfly. So that's earnings power trader. Any questions on positioning, butterflies, right? Butterfly versus spreads. I went over butterfly, went over spread, how to structure these trades, right? Let's say I think Micron is probably going to trade somewhere on the upside, somewhere between 150 and 170. So you can structure butterfly or a condor that basically covers that range, and as long as it actually moves from 140 to 150 or 160, you know, this should be a profitable trade. So keep an eye on the email if you sign up, and I would say please watch the recording of Micron's, you know, Wednesday, of how I structured the trade, right? So you're looking for these asymmetrical returns, and butterfly is probably one of the cheapest way to have a either market neutral or directional bias, where you invest, you know, maybe 0.5% of the underlying stock. But you've seen some of the earnings recently with Adobe, Oracle, where I was able to, you know, structure these triple-digit returns, right? So if you're looking for triple-digit returns, even though you're not supposed to advertise them, they happen rarely, right? You actually, it's a frown upon to advertise them. But if you're careful, and obviously this is just the distribution of outcomes, there is no 100% certainty that, you know, this is going to be a profitable trade. But if it is, and probabilities right now are elevated based on these dealer flows set up, then you can structure your trade where you could have triple-digit returns, right? And that's kind of the goal, to have more of a barbell approach to portfolio rebalancing, where majority of your money may be more conservative, right? You buy Goldman Sachs, you buy Microsoft, you know, they're not going anywhere, at least in the near future. You have certain percentage of your portfolio, right? 10, maybe 15%, where you look for these asymmetrical returns, right? You buy a call, GameStop call, with hope that it's going to triple in price, right? So this is something similar, but, you know, I think a little bit more scientific, right? GameStop, you're at the mercy of, you know, social media influencer and how many people can get behind them, right? And you have no idea. Here, you actually look at the dealer position, and the odds are, I think, a lot higher. Any questions? Osama, Dan, Dow, Denis, Leet, Luis, MC, Marco, Samaraj, Trader, Walter, Werner, William. I haven't lost anyone. Oh my God, and a lot of people. Thank you very much. I really appreciate Sunday. It looks like a good day to have these events. And finally, after earnings power trader, profit accelerator. A lot of people say, Vlad, you only trade in options or you only trade in stocks. I try to be accommodative. I know some people don't like options, so profit accelerator is stocks only, right? Earnings predominantly options, dynamic 50-50 stock options, aggressive weekly predominantly stocks. So profit accelerator, again, you can see all my orders, all my positions. You could look at the history of the portfolio. You can enter your phone number, right? For each of the, if you have platinum, right, or if you have premium subscription, you have access to all portfolios. So if you want SMS from all of them, then you would have to go in, you know, click this button, enter your phone number, and, you know, that will activate the SMS messages. And again, I encourage you to watch the recordings. Don't trade unless you watch at least some of my recordings to get on the same page. If you can participate live, that's even better. Any questions? All right, I mean, that's all I have for today. Thank you very much. You guys have been awesome. A lot of people joined, so I really appreciate it. Charles, Raj, somebody just joined just a few minutes ago. All right, I'm gonna try it since we have even more people joining. It's a little bit, you know, getting late. But mainly I covered earnings, right? Micron and NVIDIA. You do have symptoms of gamma squeeze, dealer positioning, where this could be a beginning of at least consolidation for some of the mega cap stocks that were leading the market, like NVIDIA, right? Similar setup to March, where for a few months we could be just going sideways. I also covered General Electric, Goldman Sachs. They've been going sideways, but now they look like they're starting rebounding. Interest rates are low, so we could have kind of a short-term rotation from these mega cap technology into the value stocks. In terms of spiders, a very large position if you look at the dealer flow at 530. I personally think that 530 50-day moving average will hold and buyers will step in, especially because of the dealer positioning. And on the upside, there's some cold selling at 560. So I don't think we're going to get much further than 560 until the earnings season starts full force. And you have to be careful. We're still in the elections year, and usually we have debates. I don't know how much it's going to influence this week debates, but usually June, July from seasonality is good for elections year. Then you have some kind of a pullback until November elections, and then after elections you have rally. So expect choppy market, expect volatility. I would have diversified portfolio, but there are some mega cap technology like Google, Microsoft, looks like they're trying to break out to all-time highs. So I think the strategy is buying to pullbacks. I think these pullbacks will be probably short-lived for now and shallow, 3%, 5%. I went over the different portfolios that we have. Again, just to recap, aggressive power trader, short-term trades, stock, you give support resistance, we give you long-term analysis. Weekly power trader, a little bit longer time frame. Dynamic power trader are your weekly models, right? You hold it for a little bit longer. Dynamic power trader is where I trade stock and options. Earnings is where I trade earnings. I went over Micron. We did KBH, right, last week. Just in live trading room, there was no recording because the spread was, it wasn't very liquid, the bid and ask, so I didn't want to, without explanation, right? So if people attend live trading room, sometimes I show my trades in my own portfolio where they're not being recorded, right? Just kind of encourage people to participate in live trading and watch the record. But this was a good trade where I sold the call spread because the home builders were underperforming. Then I went over Micron earnings, which is coming in the next couple of days, and the difference between profit and loss of spreads versus butterfly, right? Being long or short volatility and looking for asymmetrical returns, right? How do you structure your trades where you can have triple-digit returns, right? So Micron would be this week, and we'll try to pursue triple-digit returns on Micron. Any other questions? Osama, thank you for participating. Luis, thank you. Richard, missed just joined. So if you just joined, yes, every recording, I recorded in market plan, I think from last week, key trading metrics, return on capital, probability of success, estimated move. Pretty important webinar, so you can watch it here. Let's see, trading discipline. Under trading discipline, I recorded trading bullish call spreads, right? And risk aversion, game theory. So please watch trading discipline. And under trend analysis is where I record these weekly webinars. So there's a 5-minute video from Wednesday, and then there's usually 40 minutes webinar. So it's all of that is free. Come from families of educators. I think education should be free. So all of that is accessible, and by end of the day, you will have a replay here under trend analysis. As soon as it's over, I will send actually an email with the blog. So on Sunday, I send email with the blog. Please add info@yellowtunnel.com. On Wednesday, I send 5-minute video. And then on Sunday, I send the blog with and there's a link to this event. So keep an eye. By end of today, you'll get an email with the blog with the link to the recording. All right, Raj, thank you for your participation. Thank you for being valuable subscribers. Actually, today is a lot more. I gave direct link to the webinar. I think that makes a huge difference in terms of participation. Okay, good. Learning every day. Thank you very much. Have a great day, and I will see you guys soon. Thank you for participating. Try to join live trading room. We do have 30-day free trial. You can look at the pricing, right? You can join any of these subscriptions. You have 30-day free trial, right? 30-day free trial, and at least watch the recording to participate. In 30 days, you can actually get free education, trade along, you know, and I think that would be very useful. And and if it still doesn't fit your training style or you haven't learned anything, well, you get your refund and 30 days of free education. I think that's kind of a risk-free trial, no-brainer, and I hope you guys can take advantage of that. All right, thank you. Thanks, everybody. Have a great weekend. Enjoy time with your friends and family. I'm going to Michigan, to Ann Arbor. My daughter is taking not internship, but summer camp in debates, right? In Ann Arbor. I'm super excited. 5-hour drive awaits me. So that's what I'm going to do. Thank you very much, and enjoy time with friends and family.